Hey, welcome in. You're listening to a daily editorial on the Korelin Economics Report. So Big Al is here with his friend Frank Holmes. Frank really doesn't need much of an introduction, but I'm going to give him one anyway. Frank runs one of the more successful funds in the country, U.S. Global Investors. He works out of San Antonio, Texas. Started out in Toronto and then moved down to Texas, and the rest is history.
That makes me a Tex can.
That makes you a Tex can.
Y'all come back, eh?
Y'all come back, There you go. Having said that, Frank's going to be on the weekend edition of the show, which we're going to record this coming Friday. Reason we're not doing that one right now is the market is so volatile as of today that I think things could change dramatically in the next 5 or 6 days. But I wanted to get Frank on just to give you some opinions as of this particular moment. And my first question is this: Frank, gold was up on Friday a little over $60 an ounce. Silver was up close to $1 an ounce. All the other conventional markets absolutely, slathered in red, for lack of better terms. The Dow lost any gain that it made in 2012. I'm thinking, or maybe I'd like to think, that what we have here is a turn in the hard assets sector. What's your opinion?
Well, looking at the stress of markets, we like to look at the movement in the dollar versus any of the commodities.
Right.
And what we have seen is that 2 weeks ago, the gold was down, 2 standard deviations, and that means there's a 90% probability of a substantial rally,
right,
because the dollar was overbought over 60 trading days and also over 1 year of data points.
Okay.
So this mathematical mean reversion, like the tide goes in and goes out, has a nice cadence to it. So I think we're in that type of rally mode. Now the big issue is, will the governments in Europe continue to add liquidity to the system? What's important for investors is that the German 2-year government note has a 0 coupon. 0.
Okay.
And we're seeing deflation take place everywhere, and the governments are petrified of this massive deflation, so we can expect more and more printing of money. And in
Sure.
the U.S., which shocks me, is that 60% of this deficit of over $3 trillion, 60% was funded by the government buying back its own debt,
right,
monetizing.
And my question for you is, and who says QE3 didn't start a while back?
Yes.
I mean,
So the governments are, in that position, and that's coming more and more with the G20 meetings. They basically collude together, and they try to set an agenda to create a support mechanism into the economies. But however, there's becoming more refereeing than there's players in the sports field, and that does change outcomes and dynamics.
I have to agree 1,000% on that one. Here's an interesting question. You talk about the coupon rate in Europe. Last Friday in the U.S. on the long bond, we went up to 1.51, which was almost in the atmosphere where it's all relative, but the coupon rate, or the rate there, went up significantly higher. My personal opinion is, I think that we're going to see the U.S. dollar perhaps increase even more in value than it's at right now, but I don't view that, quite frankly, as being a long-term issue. Do you?
Well, I think there's no doubt that in the beauty contest of who weighs the most,
exactly,
that America is the most attractive. I mean, that's just how things are taking place. But what's important for, and the challenge for the administration today, is that every time we've had a falling dollar, 6 months later, we have job creation. And every time we've had a big rally in the dollar, all of a sudden we have job contraction.
Yeah. So
coming to the election in 6 months from now, it's very important to have jobs being created, but a rising dollar will mute that, will create a difficulty. So that's a key factor for the presidential election cycle. But I think what investors have to look at, what shocks me, is this looking at the Mac, the Apple computer. The Apple computer's market cap is bigger than all utilities in America. Now, you need utilities to charge your Mac or your iPhone. And it's also bigger than all the basic material companies that are public.
Doesn't make any sense.
And it's also bigger than all the telecoms. So this separation of needs and wants, people are running into technology. I love the Apple products. However, there's a disconnect of buying Facebook, and more money's been lost in Facebook in only a month than all gold stocks, all the gold funds combined for the past year. So you have a real disconnect that I think that we're probably getting close to a bottom. But what's important for investors is not to go chase things, is to be diversified. Research shows it's prudent to be 25% in resources, it's prudent to be invested in good quality companies internationally, and 25% in great high dividend paying stocks in America, and another 25% in short-term income. And rebalance those to 25 each is just prudent.
I agree 1,000%. All right. Interesting advice from Frank Holmes. Don't take anything that I'm saying as investment advice, because you know what? I'm not a registered investment advisor. Just a guy who's been involved in this sector for close to 35 years. Frank, always a pleasure, buddy. Thank you.
Thank you.